We had the Delta variant, we had the Omicron variant, we had all kinds of crazy things happening in 2021. Join me as I discuss what's happening in the markets as we begin 2022 and a quick review of 2021. Hello everybody, I'm Dean Barber, founder and CEO of Barber Financial Group. Happy New Year to all of you. Welcome to the monthly economic update. It is January the 3rd as I record this. 2021 wound up being one heck of a year across the market. We're going to review that here in just a minute. 2022, as we record this video, it looks to be off to a good start as well. So let's take a quick look back at what happened over the year with the different indices. Let's start off by looking at the last month. If we look at the last month, the best performing indice was the RSP Equal Weight, and that was up by 5.96%. Dow Jones Industrial Average, second place, up by 5.34%. As we kind of come down here, you'll see that we had positive numbers across the board for the month of December. Now, most of that, as you can see by this chart, came from December 20th on. We had a little bit of a Santa Claus rally there that has leaked into this year. Our worst performing sector for the month of December was the NASDAQ 100, the QQQ, up 1.07%. Let's take a little bit longer look back over the last 3 months. Everything's still in positive territory. Obviously, some choppiness here during the month of November and December, which everybody saw. NASDAQ 100 for the 3-month period is the best performing sector, even though it was the worst performing sector for the month of December. For the 3-month period, up 11.14%, followed by the equal weight of 11% and 10.68 on the S&P 500. Our lowest performer over the last 3 months was the Russell 2000, up just about 1.69%. Let's go back over the full year and just really take a look at what went on here. We had 3 different indices that were up over 27%, the S&P 500, the S&P 100, and the S&P Equal Weight. And so all of those up to over 27%. NASDAQ not too far behind, 26.81%. Small cap coming on down here to the Dow Jones Industrial Average, up 18.81%. And the Russell 2000 up by 13.46. So as you can see, we had really great returns across the board with the indices. And I think the real question right now is, what is 2022 going to usher in for us? We're right in the throes of, record number of new cases with the Omicron variant of COVID-19. We've got a inflation that is running very, very hot. We have a Federal Reserve looking to raise rates this year. I believe that they'll be done tapering and all of the bond purchases that they're doing for sure by summertime, with the first rate hike likely to come sometime in June. And so that is going to push our yields on treasuries a little bit higher. I do believe, as I've said over the last couple of months, that we should see the 10-year treasury finish the year under 2%. I think it's going to be choppy as we start the year here. And I think that the real question as to where we go for the first quarter of this year is going to depend an awful lot on how we respond to the Omicron variant and what hospitalizations start to look like, and whether we start to see additional closings or shutdowns or more restrictions put in place. And as you all saw over the holiday period, travel really got into a major bind. And I hope that none of you were caught in those airports and long lines and canceled flights and all of that. We all know that the COVID-19 can actually disrupt a lot of different things. But if we go back and step away from COVID for just a minute and just understand that by and large, our economy is looking good. Corporate profits are looking good. Unemployment is looking good. We've got just all kinds of things out there today that we should be excited for 2022. I'm not going to go as far as to make a prediction on what I think the stock market's going to finish at this year, but I do believe that it's going to be choppier than what we had in 2021. But right now, we're looking for positive returns in the high single to low double digits. So I don't think we'll see anything near what we saw in 2021. But We could always get a surprise on that. Let's hope we do. But let's look for some positive things to happen. We do know that in the fixed income sector, we're going to have to be a little bit more nimble and probably do not want to be holding treasuries or high quality corporates at this point in time. And so you'll be talking with your advisor here at Barber Financial Group about your bond holdings and bond positions and things that we're doing in order to protect that fixed income space. With that, I want to wish all of you a very happy new year. Thanks so much for joining me. I'll be talking to you at the end of January. I appreciate you joining us here. And if you're joining us on social media, make sure to give us a thumbs up and share this with your friends. If you're watching us on YouTube, make sure and also give us a thumbs up and subscribe. You'll get notifications every time we set a new video out. Also, I encourage you to engage with us on social media and YouTube by getting a dialogue started, and we can get conversations going back and forth. Chances are, if you have a question, somebody else has that same question.